And today we are going to discuss an important topic, that is CARO 2020. That means Companies Auditors Report Order 2020. You see, whenever an investor who wants to invest in a company or who wants to purchase shares of a company, in general, they will check the what is the profitability of the company and what is the year-on-year sales growth. Any investor will consider like this only. But we are all semi-registered investment advisors, so we want to see the three aspects for any company, not only profit as well as year-on-year sales performance. That is also one aspect. That also we have to analyze in deep. Apart from that, we have to see three angles. First, the risk factors that the company is exposed to, how it is managing the risk. What are the proactive activities, proactive steps that the company is taking? Another is governance. How effectively the governance is being carried out in the company means how the decisions are taken, how it is implemented, what are the kind of information systems generated in the company. These things related to governance and financial discipline. Financial discipline means what? How they are having the relationship with the bank, how they are treating the suppliers, how the funds of the company has been handled by the management. So these three things and all we have as a investment advisors, we will analyze, and based on that only we will take a decision to construct the portfolio. Okay. With this introduction, we will go to the CARO 2020. I am Dean Murali, a semi-registered investment advisor. We will consider how the company is handling all these issues and all. Okay. See, as I told you, when we are deciding to invest in a particular company, we want to know the background in a different way. That is governance, risk factors, as well as financial discipline. That is where CARO becomes a extremely important tool to us. CARO is not just another audit requirement. Of course, auditors only are giving the report, but it's not another audit requirement, but it is a powerful tool for investment analysis. It has 21 classes. 21 classes it is having. Okay. Now we will go through we will study about the CARO little deeper, not as a student, from an investment angle, let us consider this. Okay? Yeah. First, see, before that, we want to know that the CARO is not applicable in respect of banking companies, insurance companies, Section 8 companies, 1% companies, and small private companies. That is the 1-1-10 rule is there. 1 crore is the paid capital, 1 crore is the borrowing, and 10 crore is the revenue generation. So if a company falls within this bracket, no, CARO will not be applicable. Otherwise, CARO is applicable to all companies, including foreign companies. So, auditor is to analyze all these things. Auditor first he is analyzing the balance sheet figures as well as the profit and loss figures, and whether it is accounting standards are being passed, being followed, and how the information has been captured into data and information like that. But CARO is a different angle. CARO is dealing all these things. Means assets, loans, deposits, statutory compliances, bankage, borrowings, fund utilization, related party transactions, internal audit, bank related, as well as CFR, cash, and CSR also it insists the auditor to verify the CSR activities also and the group companies. You will see in detail. See, First, auditor is okay. Now, CARO is asking the auditor to analyze the intricacies of these headings. For example, PPE, whether all the fixed assets or property is in the name of the company, all the other documents are available, and in respect of inventory, whether how the inventory has been booked in the books. That means what is the procedure they are following for physical inventory, what is the kind of control they are, internal control they are following, all the controls and loans. What is the kind of loan the company has been given, whether it is secured or unsecured, what is how the interest of the company protected, all these things and all, instead of data and numbers, the CARO is asking the auditor to analyze and give his report in detail. For example, statutory dues. Statutory dues, if the company is delayed, delayed for more than a period of 6 months, auditor is to give it. See, whenever the GST, PF, income tax, TDS, customs, advance tax, all these things under whenever a company is reluctant or delaying to make the payment, now all of a sudden the company is to pay along with the interest. That interest rate will be much bigger than the bank interest, as well as it will impact the cash. It will impact the sudden. It will create a sudden impact on the cash position. So whenever you need your money, you have to divert compulsorily to these obligations. So how the statutory is seriously followed by the company, whether company is paying its all statutory dues in time at the correct rate, such things and all is to be most importantly, the auditor is to analyze and give his report. Okay, not only that figures as given in the P&L account or balance sheet, and defaults in for borrowings. See, companies are always expanding their activities, always finding the new markets. They are borrowing money for long-term, short-term purposes, working capital purposes, but due to unavoidable reasons, they are using the working capital for long-term uses, and the long-term funds and all, they are using it for working capital. Due to all these things and all, cash crunch started. The budgeting system is not there. Cash flow is not properly followed there. Company will land up here. So auditor is to give a detailed report on this default on borrowings. Okay, IPO. See, what is the purpose or what is the intention for raising the money as declared in the prospectus, whether it has been followed sincerely. First, there is a committee is issuing the prospectus and stating that these are the purposes for which company is going for IPO or rights issue. Whether that purpose is being followed is to be analyzed and is to be given by the auditor, which is the very, very vital for the investment purpose. Okay. Apart from that, related party type, this is the only critical area. Related party, internal audit system, whether they are following it properly. Okay. See, it goes like this. And see, these non-cash items are there. Now, see, book entries are there. Money would not have gone. Only book entries are there. These entries and all will be analyzed by him, whether it is followed as per accounting policies and standards, and as well as going concern. When a company is performing its sales and obligations correctly and making a profit, it is a going concern. Like that, CSR, corporate social responsibility. What is a fund available? What is a fund deserved to be spent? Whether such a fund has been transferred to a separate account. These things are all is to be analyzed. Okay. So CARO, I say CARO is being really at all times whenever you are analyzing a company, first see the CARO report. Study because it is analyzing the background of the transactions. So CARO is used in real business by bank loan approvals, investor due diligence, fraud detection, internal audit planning. Okay. So every investor must read CARO before uh, deciding the investment. So, so important. It is you cannot miss it out. Okay. So understand the company risk before investing, and the company is running ethically and principally and with discipline. That speaks a lot when you choose for the company. Okay. So for these things center is being analyzed as a by me as a semi-registered investment advisor. So for practical conveyances, you can contact us, contact my company, Dharani Capital Conveyances, which is about to be registered as a corporate for investment advisors. Thank you.